All right, what is up, traders? What up, tycoons? Super excited for today's video. Gonna give you guys an update on KDA real quick. All right, we're gonna break it down. We're gonna go over how in my last video I basically gave you guys the trend, what to look for a trend continuation, and then we're also going to look at the major support and resistance levels currently that we also went over in the last video. A lot of stuff has been happening on in the cryptocurrency atmosphere, and just the environment as a whole has been experiencing a lot of pain. But today, in the US, we got a bullish CPI report. Okay, inflation finally came down on one of the reports. And it was a huge catalyst, okay, especially for the stock market, and that flows over into the cryptocurrency markets as well. Okay, we can look today and see that KDA is up over 12%. And I'm going to show you guys, the major levels. And before we do that, we're going to break down, how I found these levels and how we were able to tell basically just by looking at the past real quick. Okay, so we're going to show two examples real quick in the past, and then we're going to break down the current chart and show you guys the major levels that I'm looking at and watching for right now. All I need you guys to do is smash the like button, okay? Especially if you learn anything new, and then subscribe to the channel if you enjoy this video, because I'm going to be dropping about 5 to 15 videos every single week, and I do viewer requests every single week as well. So if you want to see your cryptocurrency, your ticker in the next video, make sure to comment down below, and I'll be happy to do it for you as soon as I can. So we're looking at these three levels right here. Okay, the 618, the 50%, and then the 38.2. These are the three most common retracement levels to tell if you're going to retrace and continue a trend, right? So, we can look when we're in this downtrend, we come down, we come up, we retrace, okay? And this is a retracement, right? That bounce, because nothing is going to move in a straight line up or down, right? It's going to retrace eventually, and you'll be able to figure out, okay, is this a healthy retracement for a trend continuation? Or if you break those retracement levels, right? If we break these and we come up, then we have the possibility of a reversal of the trend, all right? So here's our example. Boom, we come down, we retrace, we hit resistance at the 38.2 and we drop lower, right? And then we come over here and we can see that we do the same thing again, right? We take this high down to this low on the fibs, right? And that's the tool that we're using, by the way, right? We're using this tool right here, the Fibonacci's. We're connecting our swing highs to our swing lows, and we're looking to see, all right, when we retrace, are we going to break through these levels and, not have a trend continuation and look for a reversal possibly, or are we going to come down, retrace, and continue the trend? Well, so far we've just been doing that and retracing and continuing the bearish trend. All right, so that's what we're going to be looking at here, right? If we look at the chart now, okay, and I'll zoom in on this so it's a little bit more clear for everyone. In my last video, we were basically right over here, okay? We were right up in our retracement levels, and I was telling everyone what I just showed you guys, just now, right? Is that we come down, we retrace, and then we continue the trends. If we're able to break through here, all right, I gave you guys a breakout level and then bullish price targets to the upside, right? Well, if we look now, all right, and then, also I gave our levels to the downside in case we do continue this trend of where to look for some support. And once you break support, that support becomes resistance, okay? Now, I do want to highlight that we did have a chance of coming and breaking these because we had some bullish divergence, right? This is a indicator that you may see bullish activity in the future. And what it is we have this low right here, then we have a lower low right here, right? And what we see is we have a low and a higher low on this is our relative strength index. So this measures the relative strength of a token at its given price. So the token was in a downtrend, right? Going lower, but the strength of the token was increasing, going higher, right? Well, look what we did. We came down and we broke right through that level. This is all of the FTX crap. This is all of the FTX, dumping, right? That crashed the whole cryptocurrency market. That's what that was. It broke through that trend line, and then now we're trading back above it, right? So there's a lot of things called fake outs that happen a lot of times, right? And so this is a good example of a fake out. Possibly, right? Now, it may not be a fake out. This could end up curling and coming back down, all right? But, there's an unexpected catalyst, right? Something not planned for is going to happen, right? And we broke through our level, and then we really took a big dump on KDA, right? But if we look now, right, we'll zoom in some more, okay? And we'll take a look at it. And this is the trend continuation that we got, that we were not really looking for and didn't want, but that I was trying to prepare everyone for just in case, right? Because if you would have seen the clean rejection right here off your 50% retracement level, that right there could have been your sell signal, and you could have avoided all of this crap right here, right? That's the reason that we're using technical analysis, is to help give ourselves an edge. Trading, investing is like going to battle, going to war. You need an edge. You need to bring the proper weapons, and as many weapons as you can, right? You can't bring a knife to a gunfight, and you don't want to show up with a knife, a machete, and what else, like whatever, and your opponents are out there using nukes and bombs, right? We just got freaking nuked with the FTX news crashing the market, but we came down, right? We came up, retraced, and then look, we just continued the trend, right? So using these things, right, using these things that are giving you an edge is really going to help calm your mind, right? You're not going to panic so much if you already knew that we were in a downtrend continuation, right? Even though this was very surprising, major drops in just 2 days, right? This is the daily chart. So these are just two very big red candlesticks. But what I want you to look at now is how after we've retraced and continued the trend, look at where we're battling resistance at right here, 1.13, okay? That is our major resistance level that we need to get above right now. We couldn't find support here at 1.20. We couldn't find support here at 1.33, and we couldn't find support here at 1.046. All right. So, those were the major support levels that I was looking for. We did kind of get a little bit of a bounce right here at 1.0467. And then we shot back up, and then we faced resistance right here at the 1.20, right? So you see, we come down, we retrace, and then boom, we continue the trend, right? And so what we're doing now is we're trying to see buyers step in the market. Again, we're up 12% today. Great day, when it comes to like a single trading day, but overall, the atmosphere has just been really heavy, right? It's been weighing everyone down. A lot of people are panicking, right? I'm trying to make this video so you guys don't panic, so you guys understand technical analysis and you understand the price action a lot more. And when you use the fibs, you're thinking like an algorithm, right? Because about 70% of trading is done by algos, right? So this bad news comes out, the algos go dump, 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 sell, 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 sell. And you're basically going to be able to use some of the numbers that they're using, right? Because they're using the Fibonacci tool, right? It's a mathematical formula that exists all throughout nature and the cryptocurrency markets, right? As well as the stock markets. So, if you want a little bit of an edge, that's why I use the fib so much. And that's why I use the tool to give myself valid price targets to the upside, to the downside, determine major resistance levels on your retracements, to determine major support levels on your retracements. So that's what we're looking for, right? So right now, again, 1.33 is our major resistance level. We want to see us be able to break past that, right? We need to be able to break past this area and try to recover, okay? Otherwise, we're going to continue this downtrend, okay, and head down to possibly 0.796, okay? That's going to be my next bearish price target. If we come down, boom, boom, right? It's going to look like that. Okay, we're already getting rejected here. I would love to see us maybe possibly pull back, bounce off of this 1.046, and then continue upwards. But again, we're going to have a very strong resistance level there of 1.20. So patience is key. All right. Not panicking is key. Understanding price action is key. And hopefully in this video, you learned some of the things that can help you understand this price action and really give you an edge in the market. All right. So if you did, again, smash the like button, subscribe to the channel, because I'm dropping 5 to 15 videos just like this one every single week. And if you want to see your cryptocurrency, your token, your ticker symbol in the next video, make sure to comment below. I'll be happy to get to it as soon as I can.